Let's get real for a second. Most gold scalpers, maybe even you, think the key to more profit is a better indicator or a new strategy. But what if I told you your biggest enemy is actually sitting right between your ears? Today, we're going to break down the 5 subconscious glitches that are probably costing you money right now. And this right here, this says it all. The real battle isn't with the market, it's not with the algorithm, it's not with the volatility, it's the war going on inside your own head. The toughest patterns you have to fight aren't on the chart, they're in your own brain. I mean, it's the million-dollar question, isn't it? You can know all the technical analysis in the world, you can spot the setups perfectly, but if your own mind is working against you, you just stay stuck. This whole explainer is about finally getting unstuck. All right, let's dive into trap number 1. This is the big one, the one that probably gets you more often than you'd like to admit. It's that irresistible urge to chase a move, fueled by nothing more than the thrill of a fast-moving market. This is pure biology, folks. You see that gold candle just take off, and your brain gets a jolt, a little hit of dopamine. Suddenly, all your careful planning, your rules, your entire strategy goes right out the window. That fear of missing out, that FOMO, it's a powerful chemical reaction that hijacks your rational mind. And this slide just lays it out perfectly. It's 2 completely different worlds. The retail brain is all impulse, all reaction. It's moving, go, go, go. The pro brain? It's all process. No, that's not my setup. I wait. Pros feel the same urge, but they have a system that's stronger than the feeling. And that's the choice, right there. You have to burn this into your mind. Every single time you feel that itch to chase, you have to consciously pause and ask yourself, am I here for a quick thrill, or am I here to run a business? Discipline or dopamine? Okay, so trap 1 is about chasing the future. Trap number 2 is all about being chained to the past. This is where those missed opportunities from earlier in the day come back to bite you. So what is anchoring bias? It's basically when your brain gets fixated on a price that's just not relevant anymore. You saw that perfect entry level during the London session, and now it's hours later, the New York session is in full swing, but you just can't let that old number go. It's become your anchor.
And this is where it gets really dangerous. You feel that sting of missing out, right? And it turns into this need to get back at the market. So what do? You force a trade on a much weaker setup just to make up for the one you missed. It's called revenge trading, and it's a guaranteed way to dig a deeper hole.
We've covered the greed of chasing and the anger of revenge. Now, let's talk about the most powerful emotion of them all, the one that can suffocate a perfectly good trade before it even has a chance to work. Let's talk about fear. You see, our brains are literally wired to feel the pain of a loss about twice as much as the pleasure of a win. It's called loss aversion. And in trading, it means you become so terrified of a trade going even a little bit against you that you set your stops way, way too tight. You end up choking the life out of your own trade, guaranteeing one small, infuriating loss after another.
Man, this quote is everything. A single loss? That's just a business expense. It's the cost of doing business in this game. The real damage, the thing that blows up accounts, is what you do after the loss. The moment you break your rules out of fear or anger, that's when the real destruction begins. All right, let's shift gears. We've talked about the demons inside your own head. Now let's talk about the noisy voices on the outside that create this dangerous, totally false sense of security.
So picture this. Your trade starts going against you. Your plan says to cut it. But instead of listening to your plan, what do? You whip out your phone, you go on social media, and you start desperately searching for anyone who agrees with your original trade. You're not looking for the truth. You're looking for comfort. And in this market, comfort is incredibly expensive. And just look at the difference here. It is night and day. The retail brain is looking for a group hug. It's outsourcing its decision-making to a bunch of strangers online. The pro brain? It has one authority, the plan. Price broke the level, the plan says exit. End of story. The outside noise doesn't matter. So, how in the world do we fix all this? How do we escape these traps? Well, it's not about finding some new magic indicator. It's about a total and complete mental reset. It's about building a professional foundation from the ground up. Honestly, this is the most important part of our talk today.
Let's be brutally honest. Most traders don't have a real edge. What they have is hope disguised as an edge. An edge isn't a gut feeling. It isn't a pattern that looks good. An edge is cold, hard, boring math proven over a huge number of trades.
And this is how you do it. This is the work that turns hope into an actual mathematical edge. First, you have to track, and I mean meticulously track, at least 100 trades using your exact rules. No cheating. Then, you use that data to find your real win rate, not the one you think you have. After that, you calculate your average winning trade and your average losing trade. And finally, you put it all together to find out if you actually have a positive expectancy. If you haven't done this, you're not trading, you're just gambling.
Okay, look at this slide because this is where the truth can really hurt. This trader had a 50% win rate. 2 wins, 2 losses. They should have made money, right? But look at the result, a net loss. Why? Because when they felt confident, they risked more. When they felt scared, they risked less. Their emotions completely destroyed a perfectly good strategy.
And this leads us to maybe the most important and overlooked truth in all of trading. A strategy can be statistically profitable, it can have a real edge, but if it doesn't match your personality, your temperament, you will never be able to execute it consistently. You'll just be fighting yourself on every single trade. So let's do a quick gut check. Ask yourself these questions and be brutally honest. Is your strategy built for a patient person, but you're naturally impulsive? Does it require you to be comfortable with a lot of risk when you're naturally risk-averse? Does watching a trade go into drawdown make your stomach turn? If you answered yes to any of these, you are making this game 100 times harder than it needs to be. And this is the whole secret. This is the core shift. The goal isn't to force yourself to become some superhuman, emotionless robot trader. The goal is to find a system of trading that fits the person you already are. Stop seeing your personality as a weakness. See it as a filter that'll guide you to the right strategy for you.
So let's wrap this all up. What are the big takeaways? First, your mind is your biggest liability, so work on that before anything else. Second, turn your hope into hard math by tracking your data. Third, your risk must be the same on every single trade, period. And finally, find a way to trade that works with your personality, not against it. So I'll leave you with this one final question. Think about your last few trades. When you clicked that mouse, was it a cold, calculated execution of a statistically proven edge, or was it a reaction? A decision based on excitement, fear, greed, or hope? Because the answer to that question, that's what will define your entire future as a trader.